Hello, my name is Christian Manafo. I am the Chief Investment Officer of Liberty Street Advisors and a portfolio manager of the GAM LSA Private Shares Fund. Liberty Street is the delegate investment advisor to the GAM LSA Private Shares Fund, which has a Cayman master fund structure and an Australian feeder. Before we kick things off, I just want to flip through a couple of important slides that have some disclaimers and legal information. I am pleased to report that early on in the fund's life, we have already received a superior rating from SQM Research, a recommended rating from Monsec, and recently received the Emerging Fund of the Year award from the Financial Newswire. The GAM LSA Private Shares Fund provides investors access to the late-stage private innovation economy, which we're going to talk about in a little more detail as we move through this presentation today. To kick things off, the fund was started roughly 18 months ago in March of 2022. And as you can see from this slide, the performance has been quite strong out of the gate. We have roughly 30% performance year to date through September, which if you annualize that is closer to 60%. And since inception, the fund is already up more than 100%. So we have been handily beating the benchmarks for this strategy. In terms of some key fun facts, so as I stated, we focus on investing in late-stage, venture-backed, growth-oriented companies, which are making up today's private innovation economy. And we do so by investing directly into the capital structures of these businesses. So this is not a fund-to-fund. And there's a few key facts that we did want to point out about this. As I said, the fund was started in March of 2022. There is a 1.9% management fee. There is 0% performance fee, which is quite unique for these types of strategies. You typically have performance fees associated with private market strategies. There is also a ability to buy this fund on a daily basis with a quarterly redemption feature for up to 5% of the net assets of the master fund. So it's semi-liquid, which is also quite unique. And lastly, the minimum investment sizes for this fund are only $20,000 compared to what you would typically see for strategies like this in the hundreds of thousands, if not millions. Thus far, we are also pleased to report that we have made this fund available on a number of platforms, including Hub24, Macquarie, Mason Stevens, NetWealth, North, PowerApp, and Premium. So let's talk a little bit about the late-stage venture capital and growth-oriented ecosystem. There's been a very significant trend happening over the past couple of decades where we've seen the number of publicly listed companies on U.S. exchanges decrease quite dramatically. Now, there's a number of reasons why we believe this has happened. The first probably is the Jobs Act, which made capital more accessible for private companies. But even if we go back before that, there's three other trends that we would like to point out that we think have been significant to driving this trend. The first is it's very expensive and administratively burdensome for companies to be public, especially on U.S. exchanges. So if many of these companies have options to stay private longer, we've seen them take that option to avoid the costs and administrative burdens. Another driver has been that, especially if you're focusing on companies that are deep in technology, looking to innovate, perhaps even disrupt sectors, what these companies want to push off as long as they can is having to, for example, hit quarterly earnings estimates by a penny, right? That can create unnecessary volatility if they happen to miss that, as well as impacts from peers who may have impacts to their businesses, which may have nothing to do with this individual business. So another reason why we've seen companies stay private longer is to avoid unnecessary volatility and to further build out their forecasting capabilities. The third, and what we think perhaps is the most important driver, is the fact that there's just been a massive surge of capital made available to the private market ecosystem over the past couple of decades as investors continuously seek for alpha generation outside of the public markets. And so as a result of that, we've seen private companies continuing to stay private for longer. So if we look at the venture capital ecosystem and technology companies, going back to the late 1990s, we saw these companies typically go public in roughly 4 years from their inception at a median market cap of around $500 million. So these companies were fairly early on in the development of their businesses and operating metrics. If you compare that to the status quo today, you're seeing companies now stay private for 12 years, in some cases 15 and even 20 years, So they're growing into much larger market cap companies in the private market during this period. And as a result of that, you're also seeing their market caps grow. On the right-hand side of the slide, you'll see names of a number of technology companies that many of you would likely be familiar with. But this is a very important trend because many of these companies today would have been public 10, 15, 20 years ago. And the fact that they're staying private for longer means that more of their capital appreciation and thus alpha generation for investors is happening in the private market, which we believe makes it more important for investors to look for ways to access that before these companies go public. And it's also important to note that historically, 2/3 of venture-backed companies actually never go public, but instead get acquired. So if you're waiting to access these types of innovative companies in the public market, you're missing out on massive growth, and 2/3 of the field will never actually be available to you. If you look at the US in particular today, we looked at a study that basically said US-based companies generating north of $100 million are largely private in today's economy. We saw a study that hit on a 90% percentage. We replicated that study to the best of our ability and came up with, as you can see here, over 70%. But we think the point is clear. Whether it's 7 or 9 out of 10 companies, it's increasingly clear that access to the private innovation economy is extremely important. And without access to that, you're actually missing out on a substantial amount of the overall economy. And as we said earlier, as these companies stay private longer, we're seeing them grow into much larger market cap businesses. And you can see on the right-hand side of this slide, the number of private companies now valued well in excess of $1 billion. So if we think about the stages of a private company, we could think about one extreme being an early stage venture-backed company, which is the proverbial person sitting in Palo Alto, California, perhaps whiteboarding the next great idea. That's one extreme, very early stage business. The other extreme could be a mega cap buyout company, right, which has seen probably a substantial slowdown in its growth, but is now generating strong profitability, but is not doing very much in terms of innovation and is largely dependent upon leverage. The area that we focus on is pretty much in the middle. Companies that have now mitigated technology risk, they've mitigated product market fit risk, and they're now at a point in their life cycle where they're scaling and growing rapidly, and often still not having any leverage whatsoever. Those are areas that we find interesting when we talk about the late stage venture and growth segment of the economy. So we went back and we looked at, over the past 15 years, all technology-oriented companies in the US that went public, so that listed on US exchanges. What we wanted to do is to compare how a private investor who just came into the last private round of financing would have performed relative to an investor who waited to access those same companies in the public market at the pricing, if you were able to get it, or at the first trade. And again, this doesn't factor in that private investors like ourselves can often come in before that last round, or in many cases, substantial discounts to that last round. But what you can see is quite clear. The private market investor who just came into that last private round massively outperformed the public market investor, further underscoring what we're saying, which is that there's more and more growth happening in the private market. And so if you have interest in getting exposure to technology, innovation, and disruption, the data tells you that looking for access points in the private market is more and more important. In terms of our investment process, there are a variety of characteristics that we look for. There's a few laid out here on this slide. We typically do not go into companies doing less than $100 million. Often it's in the hundreds of millions, if not billions. But in some cases, we'll go down to the $50 million USD range if we find companies that we think are highly innovative and disruptive. We also look for companies with strong growth rates and strong customer syndicates as well. We also look for companies that have established management teams, and in many cases, experienced management teams. We like to see strong boards and strong governance. And back to the operating metrics, we also like to see, if they're not already profitable, that there's a path for these companies to achieve profitability. Growth is important, but growth at all costs is not an option. We need to see that these companies have a viable path to achieve profitability. And we typically look to access these companies at a point where they're 2 to 4 years away from an exit event. And that exit event can be an M&A event, it could be a public listing, or it could involve us selling a private position back into the private market. And because the private markets are structurally liquid and information is asymmetric, sophisticated investors can typically invest in these types of high-profile companies at discounts to their net asset value, to their fair market value, and even their intrinsic value during normal market conditions. So if you think about it, during dislocated periods, our ability to negotiate even more favorable terms increases. So these become incredibly attractive times that we're living in right now for capital deployment, which is largely benefiting the performance of this fund. The addressable market is massive. If we look at the US today, there's roughly 50,000 venture-backed companies, of which we think roughly 15,000 fall into that late-stage growth category. Those companies represent roughly $1 trillion in asset value. So there's a very large addressable market. And as these companies stay private for longer, there are more and more participants that are looking for liquidity. So again, as a secondary investor, we can provide that liquidity. And because there's no ubiquitous exchange to buy and sell private company securities like we have with public market exchanges, it allows for investors to take advantage of those conditions and negotiate favorable terms. In terms of our due diligence process, it's rigorous, as you would expect of any institutional investment manager. We have very robust origination capabilities. Our team has been investing in this asset class for decades, individually and collectively. We do very deep due diligence. We have an IC that requires unanimous consent. We continue monitoring these companies on a go-forward basis on the path for them to ultimately exit. And again, we typically target a 2 to 4 year holding period. So in wrapping things up, as I said earlier, the fund is off to a very strong start, more than 30% up year to date. If you annualize that, north of 60%, more than 100% since inception. So it's handily beating its peer group. And we believe this performance has every reason to continue as we continue focusing on high caliber businesses and dislocated markets. If you look at the portfolio that's already in place today, we have nearly 20 companies in this portfolio, ranging from the space economy to cybersecurity, financial technology, digital health, supply chain logistics, and of course, a significant presence of artificial intelligence and machine learning, which essentially pervades all sectors. Similar to technology, there's not many sectors of the economy that technology does not touch in today's economy. So this fund provides access to many of these sectors of the economy where we are seeing attractive innovation and disruption. The cash percentage on this page is a little bit misleading because we have a number of deals that are pending that we have to reserve capital against. Unlike public markets, we can't just identify a company we want to buy and enter a ticker and press a button. It could take weeks or months to close these deals. We have to reserve capital against them once we've negotiated terms. But again, this inefficiency is what we like because it creates attractive opportunities for us to negotiate favorable terms. So in terms of the investment team, Liberty Street has 20 professionals, of which 8 of us are dedicated investment professionals focusing on this private shares fund strategy. I'm one of 3 PMs. We also have 5 analysts supporting us, including business development and origination experts, as well as evaluation team, compliance, and back office staff. Liberty Street's been around for nearly 20 years. It's an expert in managing these types of boutique strategies. It has a number of underlying funds that it manages here in the States and sub-advises. And again, we are the delegate investment manager in partnership with GAM on the GAM LSA Private Shares Fund, which has a Cayman master structure at present and an Australian feeder that we have been actively raising capital through in the market. Like any strategy, there are risks. So there's a few laid out on this slide, as well as some additional disclosures that I said earlier with regards to our ratings with SQM, Lonsec, and Financial Newswire, the very favorable recognition. So in wrapping things up, I'm very grateful for your time today. If you would like to learn more about the GAM LSA Private Shares Fund, we would recommend that you contact your local GAM distribution representative, and we would be delighted here at Liberty Street to discuss with you how we may be able to assist with getting your clients or yourself directly access to the private innovation economy. Thanks again for your time.